Let's kick things off with office, which has been a struggle throughout the pandemic. It represented less than half of your leasing revenue during the fourth quarter compared to nearly 2/3 last year. What are the conversations like right now with corporations about their return to work plans? Do you expect a full snapback after this vaccine kind of rolls its way through the economy?
There's a lot of uncertainty about what will happen when companies around the world return to the office. But here's what we think today and what they're telling us. Something like 85% on a weighted average basis of office employees will come back. Of course, as I said, uncertain. They'll take more space per person when they do come back. There'll be more intense service offerings and so forth. But there is going to be more remote working, more hybrid working, some people working from home full time. The really important thing to know, though, about our company as it relates to that is office is a big business for us, but so are data centers and warehouses and some space types, some product types that have really thrived. And that's what allowed us to post those strong results in Q4.
I want to circle back to what you just said. 85% will come back and that they will take up more space when they do. Are those 85% of people who are currently working from home or 85% of the overall economy, including those who are currently in the office and so forth?
You know, that 85% is a benchmark against where we were pre-COVID. And it's based on surveys we've done, lots of talk with our tenant clients. But I will say there's a lot of uncertainty about how they're going to feel about this once we do get back. They do feel, though, like things like collaboration, culture are really benefited by being together. And they also understand some of the benefits we've seen by using technology to connect while we're all working from home.
Yeah, Bob, one would have imagined at the outset of the pandemic, given your leasing efforts in cities like New York, London, San Francisco, that you'd be hurt. But you mentioned these often overlooked industry opportunities. Now, you mentioned data centers. What else are you talking about here that allowed you to make up for the lack of business you saw in one of your key areas?
Well, I mentioned data centers, distribution centers, really big. Any kind of medical space did well. Also, geographically, we're spread around the world. So, yes, New York, San Francisco, London were hurt. But we have a sizable business in Asia that held up quite well. Second-tier markets in the U.S. held up well. Parts of Europe held up well. So we're in a huge industry, diversified across client type, product type, geography. And some of those clients and some of those geographies and some of those product types did exceptionally well. And that's what you saw come through in our results in the fourth quarter.
But when it comes to some of those enormous office markets, London, New York, San Francisco, to a lesser but significant extent, I mean, do you really think companies are ever going to increase their footprints? So many seem to be trying to walk away from their leases as opposed to even thinking about sort of renewing or expanding.
Very few of the big clients that we interface with, and we interface with most of them, are saying that they're going to abandon their office space. Most of them have a view that they're going to go back to the office in a significant way, but also have a hybrid work format where some of their people are at home, some of their people are in part of the time and out part of the time. Some of their people use this remote flex space. You know, we just invested in Industrious, a flex space company that we think has got a great profile. And so it's going to be a mixed bag, but there's going to be a significant return to the office. Almost every large client is telling us that. And yes, there'll be some hybrid space circumstances as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.